If investors had their way, we would have another record year this year.
We've been focused on the alternative sector alongside the mainstream, and they are offering us very strong value.
We are seeing more and more investors trying to invest here. As constraint is lack of supply, not lack of demand.
We have seen certainly a record year last year, and there is still very strong demand for real estate, and the figures have been exceptional.
Global investors looking around the world for asset classes to invest in. UK property yields still look attractive. There is still a big margin between UK property yields and the yields investors can get elsewhere.
We think the rental growth story in its aggregate will also continue to make property much more attractive than fixed income investment. We've been focused on the alternative sector alongside the mainstream, and these give you a little bit of yield edge, and they also provide a RPI type secure long-term income for us.
We've invested a lot in the UK regions. Since the middle of last year, that is where we've really seen a huge increase in demand, and investors who were focused purely on central London will now look much more widely and will look at other cities that they weren't looking at 12 months ago.
In the past couple of years, the regions have had a lot of appeal to us. We find that the likes of a Reading, a Birmingham, a Manchester, a Glasgow, Leeds, they offer us value.
Our focus really is on finding assets where we can add value through our asset management and development management skills.
There is still very strong demand for real estate.
We see nothing within the market that makes us think it's going to change. So we think it's a very positive period for the UK property industry.